So Saul's just putting up his first slide here, getting all set up. There's a couple good invitations, or a good invitation that Saul is offering everybody today. Saul's on the CME Group trading floor in Chicago. He's been trading for about 20 years. He was one of the biggest players in the bond pit, so it was interesting to hear you talk about bonds. Saul is on the floor. He is trading online like you are with his mouse, keyboard, and screen. He's trading based on the concepts of price action trading, which we'll go over here today. During the trading day, he's at his booth, which we call Pit Intelligence. It's a trading booth that overlooks the pits during the trading day. So the special offer today is for those in attendance today to have a free access pass to the CME Group trading floor. Saul is set up on the floor. You connect to him via your PC or portable device in GoToWebinar. He's there starting at 8 a.m. Central Time. You can see his charts. You can hear his voice. He's trading himself, and he's also teaching and mentoring traders how to trade by the concepts that he has learned to put to use over the last 20 years of trading. Yana, can you put that link in the announcement area for everybody? So right now, Yana, put a link in. It's in the announcement area. That is the link that you can take a minute while we're setting up to register for. When you register, it just asks for your name and your email. And then on a daily basis, you'll receive an email from GoToWebinar. And in that email will be a link that you click on and it'll drop you right in. So starting at 8 a.m. Central Time, everybody that's in this event today has a special access pass that they can utilize on a daily basis to come on to the CME Group trading floor with their PC or portable device, land right at Saul's booth overlooking the pits. You'll be able to hear the background trading activity that's around him. You'll be able to hear his voice. You'll be able to see his charts. You'll be able to interact with him live on the floor. So it's a very special opportunity for those that are interested. Now, Saul's forte is in the S&P 500 E-mini future, so he is on the floor scalping that instrument during the trading day, live from his booth, and you have the opportunity to connect to him. So why don't we take a minute, check out that link, register, and then Saul will be joining us in a minute or two. I also posted in, and I'll do that now, it's probably a good idea, I'll post in the link in the regular chat so that you have it. Now take the time now to do it so that you're all set up, because at the end it goes away and you won't be able to click on the link. All right, so let's do another sound check with you. Welcome aboard. Right now you should be able to see the first slide. It looks like it's sized properly. Looks like we're in good shape. Hey Ron, the offer, coming for a week. Kick the tires around, see if you like it. I mean, I think it's a real privilege to be able to connect to the floor on a daily basis. A lot of business activity and trading activity happens on the floor. And Saul is trading electronically out of his booth like you are with his mouse, keyboard, and screen. And he's using the setups and methodologies that he has honed over the last 20 years. And he'll describe, what his methodology is, how he does his trades. But he wanted to make sure that everybody knew that the offer was there and that they can join him after, today's event. And if you register now, it's a free registration. You click on the link, a couple strokes, you're in, and then you don't have to leave here to do it. And you're coming in through GoToWebinar. And again, it starts at 8 a.m. Central Time every trading day. Connect to him at his booth. Hear the pit noise around him, the business activity, which I think is a great indicator in itself. And you also have the ability to interact with him as he is trading the S&P 500 E-mini. Now he's scalping, the S&P 500 E-mini and the 30-year bond future. Okay, so let's get ready to get underway here. I'll post the link a couple more times here for everybody so that you have it. Yana has sent it out. Thank you, Yana, as an announcement, so it should be there for you. Make sure you take the time to do that now. It takes 2 seconds to do it. There we go. All right, so I'll not sure if we lost his. Oh, there we go. So that's the special offer page. Gives you a little bit of description. Certainly go to our website, which is www.pitintelligence.com. And the telephone number is 312-685-2582. Market VU. It's MARKET-VU. Now, Saul's going to be doing this presentation live from the floor, so let's welcome him.
All right, thank you there, Brett. Thanks, Yana, and Morgan. Appreciate the opportunity here with TradingPub. We are, takes a little bit of time for me to change the screen, oh, there we go, much faster this time. So here's what we're going to touch upon on this webinar, and give you a little bit of idea of what we do and why we're doing things that we do here from the floor. We're going to give you reasons, and we're going to be basically focusing in on futures more than anything else, future mini S&Ps. We also, as Brad said, I traded in the bonds for many years and do have a good connection with some of the traders on the floor. We do have a booth right on the floor overlooking the bond pit as well as the S&P pit, and decided to make the transformation from the floor to the screen here only because that's where we were going, unfortunately. I can obviously give you a lot of good stories about what who's trading on the floor, and a lot of good stories on that, but that's for another day. But we made this transformation here only because I did go up to the office there for a little bit, and I was trading on the office, and it was very, very quiet, and I was getting a little bit just you're falling asleep sometimes for nothing going on. So I did come up here, and that was some of the things that keeps me in tune with the market, because of the little action that we hear, the energy that you hear coming from the pit every now and then. It keeps you awake, and also lets you know that something is up. Again, if anybody has any questions as the webinar proceeds forward, just make sure you write them, text them, or type them in there in the chat area, and I'll be able to answer them for you and give you best answer we can give you. So what we focus in on here is price action. So we've put together a few concepts and ideas that have worked for us on the floor and in the pit, and transformed them to the screen. The ability to that everybody has charts is a big advantage that we did not have when we were trading on the floor many years ago. It gives you kind of a little bit more a fairer chance of looking at price action as compared to the only price action that we really get is what the movement is that goes on the movement that happens on this with the prices that are actually traded. So those are kind of things that we focus in on to be able to give us our next entry points. No, you're not supposed to be using the GoToWebinar right now. You're good. GoToWebinar is what we use off the floor to be able to get you the stuff that we do. All right, so see, So what we will talk about is how do we enter these trades? What are we looking for? We also give you a pivot that comes basically from the floor, which it's not the usual pivot where most of you take the high and low and divide it by 3 or whatever that nice little equation is. We have to be a little bit different, not because we want to, but I think because it works better. And it's what traders on the floor are looking at to give you a good indication of which way the market is going that day, and to help us to stay on the right side of the market. We're also going to give you support and resistance levels. As we do trade off of those levels, we do use support and resistance to help us enter our trades, and also those support and resistance levels do give us the targets. And then we'll also show you what our templates are. Basically, we look at the S&Ps and a 5-minute chart and an hourly, and also look at what bonds do, because there's a lot of times there's a good correlation between what bonds do and what S&Ps are going to do. Sometimes bonds lead, as they are right now, as we're having a little bit of a nice little move here to the downside. And I think if you saw the bond chart just a little while ago, you were watching bonds here on the upside, and usually means we have a little bit of a push to the downside with bonds, as we do sometimes get inverse trade a lot of times. So the bond market does give us an indication of which way to position ourselves, and that is why we have them up there, and also how we also trade them at the same time. All right. And at the end, we'll talk about money management and how we are able to, it's very important to have good money management and what we're trying to do here. The most important thing is to be able to come back the next day. That's above all very important for all of us. Market indication, do we use volume? Not really. We understand there's going to be differential volume days. Sometimes, obviously, volatility. Yeah, so we do take into account volatility. When we take into account volatility, our stops are probably going to have to be increased a little bit. Can't keep the same levels in there for volatility, as obviously markets do tend to move a little bit faster and quicker, especially last Friday with the unemployment number. We definitely had to. So theoretically, what we try to do is we try to take advantage of ebbs and flows in the market. We are trying to look for entry points with our methodology as to what the market consistently has done in the past, and to try to take advantage of it. And the key is to look at the price action that the market creates for us, and to give us those entry points. So we're looking at about maybe 3 to 4 or 5 trades a day, and that those kind of keeps us in keeping looking, and depending on the kind of range that we're having during the day. So I'll show you. Yesterday we obviously had a few more entry points, a little bit more volatile. Well, it was quiet for most of the day until the end of the day, and then we got a little bit of action. But we're looking at about 3 to 5 trades in the course of a day, and we are patient. We wait for our opportunities. We don't get too caught up in the when there's not too much market movement. Keeps us in tow. This chart that we're looking at right now. Are there pre-market expectancies? I found out that when we I have any expectancies of what expectations of what the markets are going to be doing, I usually don't do too well. So I try to let the market kind of dictate where and when we're going, and the market does usually do a good job of that, as I'll kind of explain to you or show you right here, as the markets do tend to open up and start creating opportunities for us. So what we try to do is we wait for markets to give us opportunities, and these charts are bond charts and as well as S&P charts, and you can probably interchange them with a lot of other um, uh, a lot of other markets as well. You can see here that our first horizontal line is where our pivot is for the for this market, and as you can see, the market held here for a few times, and we had a little entry point once we got below this little horizontal line. It was our pivot. Market did bounce off of it a few times, and the probability and the possibility of us downticking at this point became a lot higher. We stayed away from this chop right here. Our blue band here is a Bollinger Band that kind of keeps us on the right side of the market as well. It's a very good indicator for the markets that we use and trade with. And our green band that you see here is proprietary to Pit Intelligence. It's a moving average that we put together that takes into account volume, volatility, value areas that the market creates, and obviously some pivots that the markets create as well. So once we get below, we have a little entry point that we talk about right around this area right in here. And the target comes down to our first support. And our first support is the support and resistance levels that I give out prior to the markets opening. So the markets open up, and I am giving out levels, and I can give you the levels that I gave out today for the S&Ps. S&P pivot today was 1865 that we have. We had resistance up at 68, 71, 75, and 80. And we had support down below at 61, 57, which the market is, if you're watching, coming down to right now, 51, and then 47. So what we try to do is once we had a reason to be short up here, then we start looking at our support and resistance to where our possible out or exit strategies may be. We're looking at this situation, probably right in here. This would be our first support level. So if we were short, given today's market conditions, and I can show you a quick little chart here. This is live right now, and the market's coming right here down to our 57 support. Which if we found a reason to be short, which would probably have been right in this area right here below 60, you'd be covering your shorts right in here. We're looking as far as our profit targets and stops. We're looking at a 2-point stop on our losses, which is on a one lot, $100, and we're looking obviously to take a minimum of 2 points and possibly hopefully more than that, like in the situation I just gave, where we would easily have been targeting a minimum of about 3 points, especially with our target down below. So the trade in this situation would have been probably short right around 60, looking for 57. Some of our traders trade our levels, which would have allowed you to buy the 57s and look for a rotation back up here. And again, looking for 2-point targets on our trades, and all we're trying to do is take advantage of ebbs and flows of the market using our levels, and also using price action for indication of when we should enter those trades. And so those are things that we look at all day. And again, we stay away from a lot of chop that occurs, and when the market's not going anywhere, we do find a trend and try to take advantage of it. Again, usually, with our pivot today was 65, and we're starting to trade below it. We hit our first pivot and made a nice little rotation to the upside, and then continued down. We would probably have entered again, like I showed you, down at the 60 area, and looking for that 57 for a little bit of a nice little scalp to the downside. The pivots are not how you would have, not how everybody figures them out. It is a pivot that I get off the floor. It's something that we talk to some other traders. We talk and see what they feel the market should be looking at, and what area that they feel is important as far as giving us a good solid pivot. So it's not the usual method of taking the highs and lows and doing all that. As far as market profile is a good indication. It used to be a really great indication for a bond market, but now they have also adopted volume more than anything else. So they look at volume, and we look at volume as far as finding value areas that the market might go try to come up to some resistance. And I'll show you the chart here. So we have a lot of low volume basically down and through here. Once we got below again that 60 area, at the 59, 60 area, as you can see here, created a lot of value right in this area. So once we broke through this lightly traded area, there was a little bit of a push to the downside. That also, if you include the the charts, that gave us another good reason why to enter this trade below the 60, to fill in these lightly traded areas, and now it's coming back here and refilling. Again, if you bought them down here at 57, which would have been one of our setups, you're looking for a rotation of minimum of about 2 points, and so we're looking for this rotation back up here to this 59 area, and then once we get the minimum of our 2 points, then we are looking for um, having trailing stops put in to be able to take more out of the market. 2 points, 8 ticks, correct. We're using 8 tick stops, not 4 tick stops. So 2 points. I am, yes, I am an exchange member, and with member prices and commissions, that's correct. But I take into consideration the fact that we talked to a lot of retail. We have a lot of retail customers, and I do understand the value of not trading too much, especially because of the cost of doing business. And I understand that that's why we're looking at minimum of about maximum of about 5 trades, all depending on if we're making money that day, and usually we don't look for every little trade. We're not looking for every little situation. Again, 5 trades in the course of a day, and if you're looking to make $300 to $400 or $500, it's not your commission costs are not going to be carrying you, taking you to another level. There, it should be doable. Some of the other things that we obviously like to do, some of the trading theories that we look at, the technicals is simply trend lines. I think trend lines do work very nicely. You saw from the last guest how he had trend lines, and once we broke it, they ended up trying to stay above it. We just made a little bit of an adjustment here. We had 2 points, gave us this opportunity, and there's nothing wrong with trading those levels there, and those again do become good entry points for us, and as long as they match up with some other important key levels, then they become good reasons to put on our trades. The thing that we try to talk about most of all is looking for many reasons for the trade, and we do give you a lot of reasons for the trade. And that's correct. We have a profit target of 2 points with a 2-point stop. And so what we try to do here is we try to layer in reasons for us for all the trades that we are putting on. And the more reasons that we have, the better the trade looks. The more reasons that we look for gives you. All we want to do is give you the opportunity, give you reasons to feel confident to be able to put on that trade, because trading is a matter of understanding what you're doing, and feeling good about the trade that you're going to be putting on, and not being too nervous. We keep everything simple here. I think simple is better. I do not have 4 or 5 different charts to look at. I'm looking at what the price action is, and then reacting to the price action as what the market gives me. Simple here is very important, because we can get very complicated with a lot of things that we do as traders, and the simpler the situations are, and the setups are, what to look for, then it becomes a lot easier for us to be able to execute and to put those trades on. So again, we're looking for layers of reasons so that you can feel confident in being able to put those trades on. In this situation here where I'm showing you, we have trend lines, and we adjusted the trend line once we broke through it here. Up here, we adjusted to the new low, and then we were able to acquire this little next push to the downside. So again, I don't feel that you should get rid of trend lines once they break through it. I think you should just adjust it, especially if the market rotated back up here, as you can see, and then we can have made this little adjustment for us. Do you have days when there are no setups or trade criteria according to your plan? Yeah, I mean, let's put it this way. I think we could probably get, there have been days where we've had to wait a long time to get maybe one setup. But usually I would say on average, we would get about 3 opportunities. But there are times where we have to be extremely patient. The one thing that I've learned that I can share with you is the transformation from the pits to the screen is that you have to be extremely patient. We try to show or try to express to our clients how patience is very important, especially when we're trading, especially when we're waiting for our opportunities. We cannot just take the next available trade or the next trade that looks good or the market's going down and I think I have to sell it. We have to wait for some kind of reversal into some or let the market kind of get an indication of a good opportunity for us to be able to enter. Again, it's very important to layer reasons into our trades. The more reasons you have, the stronger the trade becomes, and also the more confident you become in putting on the trade. In this situation here, we got our pivot right up here. We have a little downtrend here where we're staying here below our blue band, and again, our trend line there is probably the Bollinger Band, where it works very nicely here with S&Ps, and as you can see here, the S&Ps are staying below it. We have an entry point on one of our setups with our first targets down in here, which got triggered. That's where you'd have your first buying situation. And these are S&Ps, and in this situation, we're looking more, that was a good, 8-point move. So these things do happen. They do occur, and we have a 2-point stop on our stuff, but we are definitely going to be able to sneak out or take more than 2 points on our stuff when we have a good market trade to the downside. One of our clients on Friday, just to give you a case in point, he had a obviously because the market was downticking as fast as quick as it did, and we had a straight push to the downside, almost like this chart. He had on a 2-lot, ended up making about 27 points. That's pretty good with a trailing stop, obviously, and at some point did get stopped out. But so again, minimum amount of trades, and we try to keep trailing stops when we do have a trade going our way, so we take advantage. I'm always giving you levels during the course of a day where we're going to exit those trades if you're long or short, so give you an opportunity to adjust your stops accordingly. Yep. Okay. So as we can see here, these now, like I said before, we're looking at bounces in the market, and the markets do take advantage of ebbs and flows. So our levels do create some opportunities, buying opportunities in the midst of this push to the downside. Obviously, when we have a crazy day and our levels are not holding that well, I will say, like I did on Friday, we have to be extremely careful and just look to exit our our shorts at the levels that we had instead of trying to look for bounces. Obviously, at some point, we are going to get a decent bounce, and you're going to have to, look to see where the market can give us those entry points. I'm always looking for the market to give us the entry points off the price action. I'm not like trying to create or trying to say, okay, this is where we're going to. I'm kind of letting the market kind of give me a level where the market's going to say, all right, this is where we're going to get in, or this is where you're going to get short, and this is where you're going to get long. And if we don't have that opportunity, I just kind of I'll just let the market not give me that. I won't get too involved. I'm just that's kind of situation we're in. That's fine. I'm just going to be very patient and wait for the market to give me that opportunity. Again, patience is the key here. I think it's an important situation for anybody, that you should have some patience in this business, especially when we've come here on the screen. It's very important that most of the traders that we try to teach and we try to help also create and show the same kind of patience that we try to have across the board, and whatever any market we're trading at. It's very important for us to be able to understand what is going on, why the market's doing what they're doing, and that's what I try to do. I'm trying to explain to our traders what the market is doing, why we're doing it, and then how to react to it. And the only reason I can give you that opportunity is because I've been there. I've been in the and I do try to understand. I try to understand why markets move the way they do, and what creates the movement. So I've been, only because I've been in there and was able to feel it, and I try to express or share those feelings with everybody, with the people that we're teaching. Yes, we'll talk about the trade money management in a little bit, and obviously, how many contracts you're going to trade. It all depends on how much money you guys are going to have in your account, and each individual is different. Obviously, I have traders who are listening to me in the pits who are constantly, trading, and they're using, they're getting trades from brokers, and they don't usually have opportunities to say no to brokers sometimes, and so their volume size is a lot different. But we try to keep our volume size contained, and what we try to do is I talk to every trader individually. I try to understand their where they're at, and how much they're trading. If they're going to trade 1 lots, 2 lots, if they're up to 5 or 10, and we adjust and talk. We adjust carefully and adjust our trading to each individual as they come, because everybody's different. And we'll talk about that in a second there. We can't use bid and ask offers to pinpoint price action, only because they really mess around a lot with they really do mess around a lot with the bids and the offers that are in there. So it's not so much that we look and see what bids are off, because they can take them off and put them back on in a second here. So I don't really like to look at that. Yeah, value areas and then support and resistance levels are very important to us. That's funny. All right. Again, the entry points, targets, all are kind of thrown in here to give us support and resistance. We also here another chart. Again, we have our pivot that we are showing right in here, and once we start trading below it, market does downtick. We have a trend line coming in here from the day before, which I kept up here because it worked out very nicely for us, and where we were able to use it. It correlated with one of our support levels, and once we have, and then a couple reasons for us to enter our trades. We look for a support level. We also look for a trend line, and so what we try to do is layer the reasons into the trade, and we were always trying to find different reasons. We have a trend line coming in here, we have a support level coming in here, and so we have a couple reasons for us to enter this trade. And so if you're looking to buy this market on a dip, and it's coming down to a support level, one of ours, and we were not able to get short up here. So this is what we're looking at. We're looking at the level again, one of our support levels, and then correlated with the trend line, give us multiple reasons to enter this trade, and then to feel more confident in getting the trade on. And those are the things that we are looking for. Are there market makers in S&Ps? Of course there are. But you need more market makers when there are, when the market's not that big, but the S&P market's huge. So the market makers are the firms, obviously. So they're coming in all the time and putting in trades. And I don't think you really need market makers when the market is established. More so when markets are not established. All right. So this is how we have our setup, where we're looking from right to left, a 5-year S&P chart. Then next to it, we have a 60-minute S&P chart, and the 60-minute kind of is a little bit gives a little bit different look in the market. Obviously, 5 minutes it's a little bit easier for us to look at for movement. But then when we're looking for bigger support levels, better support levels, sometimes when the market rotates back down and they correlate to some of our levels that we give out in the morning, then we use those. It becomes a little bit stronger trade for us. So again, the more reasons you have for the trade, the more reasons you have to look to enter the trade. That gives us more of an opportunity for us to get into those trades. And then we have a 30-year 5-minute chart and a 10-year 5-minute chart. And why do we use bonds? Like I said, I think the bonds also help us with the movement, or maybe indicating where we're going to go. As you were seeing earlier, you saw that bond market was rallying, and that kind of gave us an indication. Maybe we're trying to look to get short the market. And again, those are the things I'm talking about when I'm trying to help you out with looking and seeing what one market's doing, how is it affecting our market. And bond markets is a very good indicator for us sometimes when we are trading to help us with where S&Ps are going to go. How do I determine the support and resistance levels? I create and I give you those levels in the morning. I find those levels, and those are my levels actually. What'll happen as far as, sometimes I do hear some orders coming in from the floor, and where they're at, and sometimes I will share that the ability to hear those big orders coming into the floor there. And I do sometimes opportunities with traders only because I can hear them, I can see them coming in as they're coming into so we do share those levels with us, and those are sometimes good for us, obviously, when we can have that ability to share that extra bit of information with you. Again, sometimes it's only because I'm on floor and I can hear the order come in, and I can let our traders know that there's a big buy or sell order into the pit. All right. I don't usually use ticks or up and down volume. I'm not into that. Again, I'm trying to keep things very simple. I think simple is better. I don't try to get too complicated in some of the things that we do. I'm using some of the old ideas and techniques that we've used because they work, and I've filtered out some of the stuff that is not too focused. Doesn't. I don't believe in like saying that when market's going down that we have to sell it. I'm looking. I mean, maybe in the old days that's what I would have done, because I could have done it in the pit and was able to take advantage of it. But right now, I have to be much more selective in the things that we do. And hopefully, I share that selectiveness with you. So, again, this is a little bit of the offer that we have here. This is where you can just go in and log into fitintelligence.com and just sign up. Also, there's a link that we're putting up here, that all you have to do is click onto it and register, and you can come listen to some of the things that we talk about. You can share some of the support levels that we give out, and share with everyone. And those are obviously given out before the market opens. And we also warn everybody of the, um, any economic reports that are going to be released that day. Obviously, they're going to have an effect on the market and on your trading. And we try to stay away from economic reports. I think they're not too advantageous for us traders, because I think there are too many black box situations do get into the market, and they can, create a lot of slippage, which is something that we don't want to do. So again, if you just click onto the register there, it's the link in. All you got to do is give us your name and email, and then you'll be able to come in and visit for a day and ask me all the questions that we can definitely talk about them. Yes, we do have the daily loss limits. Again, I'll be talking about that in just a minute here. So if you can just hang, and 30-year bond auction is going to be coming up in a couple hours here, and well, what time is it? In an hour, yeah, in about a couple hours at 12 o'clock Chicago time. And there's a lot of, I think the bond market is affected a lot by what's going on with the Fed. And so for me to give you a prediction of where I would have to say that you have to, considering what they said yesterday in those minutes, it seems very dovish, and it looks like there's going to be a good demand for them. That's all I can say. I just can't imagine it being any worse. So that's usually the case with these. Yes, 1 o'clock Eastern, 12 o'clock Chicago time. So when we're in Chicago, so I gave the those. So again, we have some crazy volatility here. Again, these are this is a bond template, and I let the market kind of gives me entry points, and then our support and resistance levels become targets, and I wait for the market to let me give me some idea of what's going on. When we have this crazy volatility like we did here with the 730 number, we kind of stay away from this nuts, because it just, we're looking at 2 points, and this is a bond market, but you could, just think about it at S&Ps as well. We are, we try to stay away. Now, the other thing we could do here, when like on Friday, I do tell our clients that we're going to have to try to increase our stops to 4 to 5 points instead of just 2. Obviously, when you're getting 5-minute bars or even minute bars that are going in 2-point ranges, you're going to get stopped out in a minute. So you're going to have to adjust, or we're going to have to adjust some of our trading to adjust to market conditions. So when the markets get a little bit more volatile, you're going to have to try to extend your stops here a little bit, maybe 4 or 5 points. And then if you're trading on one lot and it's too much, then you should just consider not trading, because it's just not worth the risk involved here in regards to trading, and when you're going to get stopped out right away. So again, the extension of your risk and also is going to help you realize if you can trade that day or not, because you just have to realize what the market is doing, and if that's the case, stay away from it if it's too much for you. So again, we let we're trading on both sides of our blue band. We talked about how our blue band is a good indicator of which way the market is going. And when those situations happen, again, it becomes very volatile for us, very crazy. But we kind of try to wait. It was holding here above our blue band, came back here, held. We got above this double top and also some old resistance. Now, once we break through it, it became a little bit bullish. So we probably, in this situation, maybe did not have a trade till late in the afternoon, where we were able to catch this little move here off of these little past levels of resistance. Once we break through resistance, it always becomes a good buy, and the market does uptick. Usually what we like to do when we have a high like this, the market usually likes to go and retest this high, And once again, this is one thing that we're trying to look for, especially when we start seeing a little bit of an upward trend here, that we have to at least go. This would be our first target up here once we got through this level, and then again have a trailing stop for any of the stuff that we do, and that helps us take more out of the trade than we're usually looking for. Trading in this situation when the market is kind of both sides of our blue band, finally wait till we have a little bit of old resistance, old support here. We broke down sharply. We come back. If we can't get above this old resistance, again, we keep things simple. We don't get too complicated. This was able to let us have a little move here to the downside and say, okay, where are we trying to get short? And we find reasons to get short, and then we take advantage of this move to the downside. This would be your stop right above this old horizontal line that we drew in here. Again, we have to wait for the market to give us those indications. We broke down, but we were not doing anything in this early part of the day because we're both sides of our blue band. Very difficult to figure out what this market wanted to do. But once we got some indication here, once we couldn't get through this, we stayed below our blue band, couldn't get above this old support level, which now again becomes resistance. Then that gave us a reason to say, all right, where are we trying? How we need to find a way to get short this market. We gotta let the price action give us an indication. And once we were able to do that, we were able to take advantage of this move to the downside. But again, we waited for the market to give us a sneak peek as to what it was going to do. So this in this situation, we kind of waited till earlier was 12 here, more like 10:30, and then at that point we were able to get. So we are patient. We do like to trade the morning, to 12 or 1 o'clock, and then it gives us the best opportunity. And then that's we again is just trying to show you the patience that we have in some of the stuff that we do. All right. So trading psychology of some of the traders here, I think it's helps us. No single trade is important. Is the process of trading, which I must focus on. Again, you're gonna have losses in this business. It's just a matter of being able to control them and to be able to minimize them and to not get affected by them. I believe it's not my job to know whether a trade will be a winner or a loser. It's my job to recognize the signal and act upon it. You can't be worried about the old trade. You lost money on it. You have to. It's a process. You recognize the setup. You recognize the trade. You recognize where your targets are. You set up your situation. All right. We have an indication of which way the market is going. We have a good idea of where we want to get out. And then boom, you set up the trade. Even though the last trade might have been a loser. You have to focus in on the next opportunity. You can't just focus on one thing and that thing being the only thing that's important. You have to keep looking for the next opportunity. Be patient and wait for that opportunity. It's very important. The one thing that I've tried to show our clients is the ability to be patient and wait for opportunities to come up, and eventually they do come up, and we have to take advantage of those situations when they do come up, but you have to be patient, be aware, and be kind of awake and waiting for them, and then do your homework and look for those opportunities. And when the time is finished, it's forgotten, and focus on the next opportunity. Very important, I think it is, especially for traders, that you can't get too caught up in what's happening, all the stuff around you. One of my traders last week was a little bit tentative in regards to entering some of our the downward move that we were trying to get, because he was a little bit nervous. But then at the end of the day, he sent me an email saying I felt really idiotic because I wasn't able to take advantage of the move. Well, it's okay. I mean, you cannot, that day was done with, you forget about it. You were going to get Monday was going to come, and you're going to get a new day. So let's not dwell on the fact that you missed a 20-point move in the S&Ps or whatever it was. It's done with. You didn't lose any money. He just could not find a reason to get short. He was trying to. The volatility took him out of a lot of those trades, and so he was like, at the end of the day, he's like, oh, I missed out on everything. I go, you didn't lose money, and you can't worry about it. Yeah, pulling the trigger is a very tough situation for a lot of traders, and that's why what we try to do in some of the coursework is to layer reasons for you to give you more confidence in the trade and to be able to look for those trades and to feel good about those trades. Uh, that's very true there. Once you pull the trigger on the trade, it is what it is. The trade analysis prior to the trade determines what the trade is going to be. Very true, and that is usually the case there. And you got to do your homework. And once you do your homework and you feel good about it, then you can't complain about getting out. You if you feel comfortable about it and you feel that you know what you're doing and you feel that you've seen the trade work many times over, then if it doesn't work, that's okay. You got to move on to the next situation. You know the next time it will, because that's what trading is all about. We talked about money management, all right, before, and focus in on a lot because it's very important. I feel that you should always have an opportunity to come back the next day. It's just like our trader who missed out on Friday's big move had a really good day on Monday. Even though he was very upset and he thought that he missed a whole big move on Friday, but you have to be able to come back the next day. So how is that opportunity going to be there for you? Well, it's very important to, money management and controlling your risk. It's very important. So the best way that I like to look at it is let's say our rule of 10. Okay, let's say you have a $10,000 portfolio, and you are going to risk no more than 10% of that portfolio. So right now, for each day, you are going to for the first day of trading, let's say you have a $10,000 portfolio, you're going to risk $1,000. All right, so now we go backwards. So now how many numbers of trades is that going to allow you? Well, let's say we're going to put 5 trades a day on. Okay, if we're looking to put 5 trades a day on. So now you divide your $1,000 by 5, and now you have a $200 risk parameter on each of those trades. All right, so if you're looking at S&Ps, now you're looking at each one lot is $100, so now you're looking on a 2 lot for 2-point risk, and so that's how you can determine how many contracts you can trade. If you change those parameters and say you're only going to put on 2 trades a day, okay, so now you're risking $500. Now you can do a trade with a 5 lot and look and pick your spots. And it's very important for you to be able to pick your spots more than anything else. So the easiest way to do this is to be able to find the amount of money versus your portfolio that you're going to be looking at every day, that you're going to say to yourself, all right, this is what I'm going to do, this is how much money I'm going to risk, and this is where I am going to take my opportunities, because this opportunity worked really well for me over time. And those are the things that you're looking at more than anything else. All right, let's what we'll try to do here is to show you this S&P move here. It's a very sharp move that we've talked about from earlier, and again, we could have got in here at 60 to target our we had 57. All right, so we were looking at 60 to target the 57 area, and they gave us this little nice move here. If you were able to buy them there and looking for 59, they did get right back up to that 59 area. You have to be very quick to scalp that 57 if you bought them there first. And if not, then you can have adjusted your stop accordingly to get out just below this last band here, which was like 675. So you're getting out a big downward trend. Hopefully you got filled here on this reversal, but really the trade was to be able to get short there at 60, looking for 57 to get out. Once we broke the 56 area, I don't know if we had a chance there, but our next level down below was a 51. They got down here right to 51. I think you definitely could have gotten filled there, because it was like they were selling off really quickly made a nice little rotation. You got yourself a nice little move here, all the way back up here to 54.75. Definitely, I think I was watching as we were doing the this show here. You definitely could have gotten 2 quick points out of that move if you did nothing else. If you got short here at 60, looking for 57, then bought the 51s on the push to the downside, you had made a little bit of a rotation. Again, we're trying to take advantage of ebbs and flows. Obviously, markets do not go straight down. We are also trying to take, get with our support levels, as in this case, the market's going down. With our support levels, we're also looking, those become targets for us. So below the 60 that we had up here, we were looking for 60 to the downside. Yeah, I mean, we don't want to usually fade a trend day. Well, we don't know it's going to be a trend day. All right. I mean, we see one right now. We're also trying to take advantage of ebbs and flows, but also, markets do bounce, and for a 2-point stop that we usually have, we can probably sometimes get a little bit more than a 2-point bounce, especially when we break down. Now, on Friday, we stayed away from it because that was not only was it a trend day, but the volume increased incredibly to the downside, and the volatility increased incredibly to the downside at the same time. So you had, we usually, our levels usually do work for us, especially 3 or 4 away, and they do give us a little bit of a bounce to let us take advantage of a little bounce back in the market. If they don't, then we start seeing it, and I usually tell our clients that we got to stay away, or you got to make sure you're short into those levels, because levels are solid, and when they start going through levels like a little hot knife through butter, then we got to, there's a little bit of an issue there. So we have to, step back and say what is going on here, and why are we not bouncing off? There's a fundamental change in the market. Yesterday we had a nice little rotation up here to the upside based on the fact that the S&P, the minutes that were released, but now we're giving it all back, and bonds actually kind of led the way. Here's let me see if I can show you a bond chart really quick, and I'll show you what they did, and they kind of led the way here. Where am I at here? Let's see. Where is? Oh, here it is. I need to show you a bond chart. So bond charts, as you can see, they kind of led the way here. They were making these new highs here at 9:30. 9:30, we were still up in this area here below, and I was, this was just before we started, and I was looking to say, well, bonds are starting to push up. They were going up really quick. That kind of gave me a reason to want to be short here, look to be short. We're below our blue band. We made this move down, came right up to it, found a reason, stayed below it. Then these things started taking off to the, going off to them. And when these things do this quick little, push up here, you're getting a little bit, you got to wonder what is going on. And we are getting inverse trade these days with bonds and S&Ps. And so that is usually a good indicator, and bonds did actually lead this way down today to this move to the downside in these S&Ps. Again, these are things that we in bond, they're not always going to be so telling. Today I think it was a little bit easier to see this little move here than usual because bonds. There was something about you saw the our guest before, he was long bonds at the time, and then once they started pushing through those old highs at 29.30, which was the overnight high, they kind of got some legs, and then they really started taking off. And these days, that market has become a really good indicator for what S&Ps might or might not be doing, as they're very sensitive to the movement there. And that's what kind of, again, we're looking at both of these markets to help us try to figure out where these markets are going to go next, and that's what we were looking at. And I would have easily told our clients in our bond market to look for a buy above the 30 and to look for our upper levels. And we had 09 and then 16. As you can see, they got up there to 12. They got up to 09. They got up to 12. And again, we're looking for a 5-point stop if you're trading off of those. But bonds have become very, very one-way trade, and they don't look. They don't really create those opportunities for you as well as they do in these S&Ps. What a bounce off of the first resistance. The first resistance at 65. Let's look at it. It's 60. When we got down here, no, it's 61. They did get down here after the opening, down to 60 and a half. So you were able to get filled, and they made a nice little bounce back up to 64 right after that. So you were able to get a nice little rotation off of that first level of support there at 61. And then the market pushed back up to 64, gave you a nice quick 2-point or more. Again, depending on, once you get that 2 points, you can just have a little trailing stop going and try to sneak a little bit more out of it. But we're looking for 2 points minimum on our moves more than anything else. And if you're consistent with what we try to do, thanks, we're working on that. We're looking to get you the ID, I guess. So thank you for pointing that out to us. Maybe we can get us the ID here before we can before we get off here. So we're working on it. I don't know why. Usually it's not. You should be able just to get in and then just give us your email and address. But hopefully we'll be able to get you what you need here. So we're working on it behind the scenes here, and you know, gotta get.
Hey,
so
Saul?
let's finish our yeah.
Hear me? Hey, Saul, you there?
Yeah.
Hey, I've got the ID for everybody. If anybody's having a problem getting into Saul's Pit Intelligence service, his live daily access to his booth through GoToWebinar, the webinar ID is as follows. It's 430-404-146. It's 430-404-146. I'm also posting, and you can tell me if there's a problem. When you click on it, what are you having? Are you having an issue with clicking on the link and registering? Just let me know what the issue is, but that's the ID. It's a recurring webinar that Saul does every day live from the CME Group Trading Floor in Chicago. So obviously if you're interested in seeing if you can learn how to trade the market as you're living and you want to scalp the market, Saul is down there during the trading day. He's scalping the market for himself. And he's also mentoring and educating traders how to scalp the market for themselves based on his setups and methodologies, the ones that he's going over here today. And you know, if you have any questions about his services, register for his Pit Intelligence service. It starts at 8 a.m. Central Time. 8 a.m. Central Time. He's on the floor at his booth. He's setting his levels for the trading day. He gives those levels out in audio to you. He gives the pivot in the S&P 500 E-mini. He gives levels on top and bottom of that pivot. Those are his go-to levels for that particular day's trade. He does the same for the 30-year bond future. He gives the pivot and various levels on top and bottom of that pivot. And he has traders that are with him on a daily basis that are part of his mentoring group. And he has individuals that come in as guests, which you are welcome to come in as a guest, spend some time with him, get to know what the opportunity is based on his services, and see if there's a fit for you. So if you're an individual out there that is looking to see if you can scalp the market during the trading day and look to learn how to scalp the market for your, or as you're living, okay, you know, based on Saul's, you know, 2-point stop. He looks for 2 points in his trades. He lets it run based on, you know, what the market is doing, so we'll go for more than 2 points. He's very conservative based on the 20 years that he has been trading. He has learned how to trade based on the concepts of price action by being one of the biggest players in the bond pit. And now he is at his booth during the trading day trading himself and educating traders how to trade based on his concepts of price action trading. So take a minute, before we're done here to register based on the link that Yana has put in and also the link that I'll put in. Now the CME Group trading floor is very active. There's a lot of trading activity that goes on that floor. You'll hear the pit activity around Saul's booth during the trading day. You hear the screaming, yelling, and the business activity. Some of the traders that come in that are being mentored by Saul or guests really start to appreciate what's happening based on volume and flow from tuning their ear to the action on the floor and also tuning their ear to as Saul comes in and out during the trading day with his voice. You'll see his charts. You'll be able to communicate back and forth with chat text right to his booth, and he'll be able to answer you. So take a minute now to register.
All right. Thanks there, Brad. Yeah, anyway, we got a few minutes here, and if anybody has any questions, then definitely feel free to ask. Again, we are trying to take advantage of ebbs and flows in the market, and we believe, because I've been trading for a bit here, that there are ebbs and flows, and the market does not go straight up or straight down. That's why we have reversals, and those things do occur. So I'm not trying to so much fade the market as I am. I guess to some extent I am, though, just to a little bit, because that was where I came from. I mean, when you're trading on the floor, and you're standing next to a broker, your broker is telling you, hey, the market's going up, there's only going to be buy orders, so you have to fade the market at some point. So I've got a little bit of newer higher highs here, and trying to inch up here. I think we get above 53. I think we make a move back up to 55. If we get above 56, I think they go up to that 58 level. So we do have a few years. I'm reading the question. A few reasons here. Maybe this market might start to tick up here. So if you were short and you did not cover down there, we had 51, and then we had a nice little bounce off of that, like I showed you earlier, and then they made another quicker rotation on the 48.5, which we were looking at 47 would have been our next level down. The number of points we generate each day probably depends on number of trades you put on each day, and the different opportunities that are out there. I showed you here today we had probably solidly, conservatively, if you bought our first level, sold them for 2 points, sold them below the 60, and bought them down there at 57. Let's say even if you bought the 57 and lost money on that trade, you have to be, I mean, it did rotate up to 59, so you have to be really quick. You probably would have banked about 5, 4, 5, 7 points on today's little move. Again, they did do exactly what we wanted them to do, and it's not always going to be the case. But for the most part, those situations do happen for us, and we look for those movements, and we look for those opportunities to get in and to take advantage of ebbs and flows. So they're there, and it's a matter of being consistent, and it's also a matter of making sure that you are looking for the opportunities. Just as an aside here, we can see what the bonds are doing too. I mean, bonds here are trying to turn over, and like I said, it's giving us a reason here to maybe look to a reason to enter these trades, to look to be long here. If you're not, we're getting a reason to enter trades. Again, if you enter the trade, you're looking at the bond market trying to turn over, you're looking at a buying opportunity, the S&Ps, then you're putting in whatever it's triggered in your head, then you're looking for a 2-point stop. I mean, that's what you're trying to do here. If you're right and the bonds do turn over and the S&Ps do pop back up, then you're going to have a trailing stop and make more money on the trade as it is.
Hey, Saul. Hey, so I just had a quick comment to make. Can I make it before we close out?
Sure. Okay,
no problem. Just wanted to make sure that everybody understood that Saul's there on the trading floor on a daily basis. If you do register today, he's not in there right now. So when he comes in, obviously he's the organizer and he'll be there. So if you take the time to register now, you're going to get an email to come back in from GoToWebinar. So make sure you sign up with your right email and you'll be able to do it. I mean, I'll post in the links again. Take a minute here to sign up as we're closing out here. Don't want to leave anybody out. You can certainly follow up with Saul live at his booth by connecting to him via this link in GoToWebinar. GoToWebinar is going to send you a link on a daily basis to come in to Saul's trading booth. Yana was kind enough to put in so if you do need the ID at any time, write this down on your trading pad. It's 430-404-146. So it's 430-404-146. And I just posted the link again. So it's from 8 a.m. Central Time, which is 9 a.m. Eastern Time, is when the room is open on a daily basis. You're all welcome to register and be part of it. Don't miss out on the opportunity to see if you can learn how to scalp and find out what it's about based on scalping the S&P 500 E-mini and or the 30-year bond future.
All right, thanks, Yana, for the opportunity. Thank you, Morgan, also for giving us an opportunity here at TradingPub. And again, we had to knock down the room so that we can do this, but we're going to get right back in there. So I'm sure all that stuff will be cleared up once we get back in here and get in our room again, and you'll be able to catch us doing our stuff. So thanks again for the opportunity, guys, and hopefully we can add something to your trading and give you an opportunity to maybe make some money. All right, thanks again.
Hey, Saul, appreciate that. And Saul's going to go back into the room now. Obviously, you're going to get a link to come back in again. The next time he is open. He's open 5 days a week. He's there Monday through Friday, live on the floor. Connecting to him at his booth is very easy by registering and having access to, the way you're coming into this great program done by TradingPub. You'll be able to see his screen. You'll be able to hear his voice. You'll be able to hear the pit noise in the background, the business act. When it's quiet, it'll be quiet. When it's robust and active, there's a lot of salty stuff, language that goes on the floor. It's extremely interesting to be on the trading floor. In Saul's case, it's extremely profitable for him to be on the floor for the last 20 years as a floor member. He is down there at the exchange. I call it the belly of the beast. Join him. You just have to take the time before we exit to grab the link and register. When you register, he might pop back in, so it might show up on your screen. The registration is the most important thing because you'll get an email to come back in after. You get an email tomorrow. You get your own link to drop in. So you have to go to your email, look for the link from Floor Traders Club, GoToWebinar. Our website is www.pitintelligence.com. It's www.pitintelligence.com.